In this video, I want to do an update on Bobs Australia's 2020 financial year report, and I'll share my take on whether the turbulent relationship between Australia and China is going to affect Bobs Australia's future prospects. Then I'll wrap up the video with the Aussie Broadband IPO and also a quick portfolio update. But if you're new here, the number on the top left-hand side of my thumbnails represents what my portfolio is worth as of recording this video. And if you are wondering, the number is changing based on my own contributions and also the changes in the share price. Majority of the time, it is changing because of my regular contributions. Now, before I get started, I am not a professional, so please don't use my videos as financial advice. But if you do learn something new, consider gently smashing that like button right there, and that would mean the world to me. So without further ado, let's go! If you're not familiar with Bobs Australia, the simple elevator pitch is that they are Australia's leading producer of goat dairy products and also one of the fastest growing infant formula brands. They are 100% homegrown here in Australia, and their portfolio of products include baby vitamins and also infant formulas. The attraction of Bobs Australia really stemmed from their incredibly influential backing in China and their unique vertical integration model, allowing them to control every single aspect from the farm gate to tinning the product. If you want to know exactly who's backing Bobs Australia in China and also how they've built their vertical integration capabilities, I've dedicated a full video on that, and I'll leave a link in the description box below for anyone who's interested. Now, towards the end of that video, I mentioned that for Bobs to have a chance against A2, they will need their SMART approval. They'll need to continuously work on the adoption of their new product ranges and, of course, maintaining their domestic relationship with Chemist Warehouse, Woolies to make sure that they keep A2 on their toes, and most importantly, leveraging their expertise to head into emerging or international markets where A2 is still relatively weak. Just for your information, SMART approval is required for international brands to sell their products via retail stores in China. So I'll go through all of the new updates from Bobs Australia that's relevant to the points that I just mentioned. And then throughout this video, I'll be incorporating their latest financial year results. On the SMART approval point, instead of waiting, Bobs acquired an ownership interest in BingMate's facility in Beihai, China, securing an exclusive use of a SMART approved brand slot. And by doing that, they worked around the tightening regulations while protecting and retaining the intellectual property of their new proprietary Bobs formulation and instantly get access to 30,000 mother and baby store network, especially in lower tier cities. On the point of new products, Bobs entered the high margin children's vitamin category in July 2020 called VitaBobs, and this range of products will be launching in 400 Chemist Warehouse stores in October 2020. In the same month, our very own Jennifer Hawkins became Bob's global brand ambassador for the next 3 years as a new mother. We will have to wait and see how moms around the world react to the VitaBobs category. At the same time, it seems like there is a growing interest of baby vitamins based on Google Trends data. If you have a family or are just about to have a family, can you please help me understand what would be the pros and cons of having baby vitamins instead of just food?
I mean, clearly I'm not ready to be a dad yet.
I guess preparation starts now, right? In the meantime, infant formula sales increased by 58% compared to FY19, and $29.8 million worth of revenue represents 55% of the entire group's revenue. Now, this growth is largely driven by strong domestic sales as well as the expansion into the Vietnam market. As a matter of fact, domestic sales grew by 270% in the fourth quarter of FY20, which really just offsetted the Q4 disruption to the Daigou channel. And direct export sales to China increased by 32% compared to the previous year. What's really important to note here is that it's easy to conclude that the sales in China is slowing down. But the truth is that the Daigou channel were heavily impacted in Q4 since most international flights are cancelled. But the growth in emerging markets, especially the Vietnam launch, have grew their international revenue by 5 times compared to the previous year. And that I am really glad to see because they are de-risking their over-reliance on the Chinese economy. At this point, you're probably curious about my take on Bobs getting caught in the middle of a turbulent geopolitical environment. What you need to realize is that there'll never be a point where things are stable. What's more important is the company's agility, adapting to change and growing despite the environment. The fact that Bob's found a way to work around the tightening regulations and had the foresight to chase after emerging markets, delivering a 5x growth from the previous year, that speaks volumes about the management culture in Bubs. Bubs is by no means immune to the geopolitical risk between Australia and China, but the action they've taken gives me comfort that they can grow despite the environment. Just to wrap up the financials, they have improved their gross margin by 14% compared to the previous year, and the statutory EBITDA have reduced by 67% compared to FY19. So it's getting really close to a positive EBITDA now, and I think they might just be able to get there in the next 1 to 2 years. To fuel their control interest in Bingmate and their future growth efforts, they announced that they will raise another $38.3 million. 28.3 of that will be institutional placement and 10 million will be share purchase plan. Now they currently have $26 million worth of cash in the bank, and post capital raising they will have $62.8 million for the next phase of growth. And as of recording this video, the institutional placement is already complete and the share purchase plan will likely be complete in the next couple of weeks. So recently, Aussie Broadband gave their customers a chance to purchase 2,000 to 10,000 shares as part of its initial public offering. Now, the company is planning to sell anywhere between 30 million to 40 million shares at $1 each, which would give Aussie Broadband a market cap of $180 to about $190 million. Full disclosure, I don't plan to invest in this IPO, but I do find the statistics very interesting and I want to at least give my take. So over the last 3 financial years, Aussie Broadband have grew their revenue by 57% compounded annually. Their EBITDA just went positive, but they did make a loss in FY20. So if we take a look at their key operating metrics, over the last 3 financial years, they have grown their new customer base substantially while maintaining a very low churn rate. Now, churn rate just means what percentage of your customers decided to not use your service anymore. So you want this percentage point to be as low as it possibly can be. And residential ARPU means average revenue per user. And you want this number to be as high as it possibly can be, because the higher the number, the more likely it's indicating that the customers are staying with Aussie Broadband, they're not churning, and therefore continuously paying Aussie Broadband their monthly subscription. And as you can see, over the last 3 years, the residential ARPU is increasing, which is a really great sign. On top of that, the CEO Philip and also the CTO John have worked together since 2003 when they co-founded Wideband Networks together. Now, Wideband Networks eventually became Aussie Broadband, and it's an achievement on its own to work together for so long and not get sick of each other. And if you've been following me, you know that I am a massive evangelist for founder-led companies, because you want the company to be their life's work and you want a big portion of their wealth to be tied to the company so that it's in their best interest to do what's best for the company. And if you look into the IPO prospectus, they still own majority stakes of the company, which I'm really happy to see. But their biggest challenge, in my opinion, is how would they win against Telstra, TPG, and Optus, especially when TPG just got the approval to merge with Vodafone. Again, I just want to reiterate that I'm not invested in this IPO and I don't plan to do it. Now, before I do a portfolio update, if you want access to my video scripts, my research, and also be part of my fortnightly Q&A, not to mention some additional content pieces, consider supporting this channel via Patreon. Now, I'll leave a link in the description box below for anyone who's interested, but nevertheless, it already means the world that you're watching this video. So thank you very much, and let's jump into a portfolio update. So just to give you a quick portfolio update, the CMC market portfolio side of things is worth 59,000 Australian dollars. A few of you have asked me, what am I using to track my portfolio? This is called Sharesight. Now, for anyone who's interested, I'll leave a link in the description box below. And the main reason I use this is because the dashboard over in CMC is incredibly ugly and it's not very useful when it comes to sharing. So it's much easier to connect CMC markets with Sharesight to just automatically track your investing activity, and whatever you do on the CMC platform will automatically show up here. For my US portfolio, I use Stake to do majority of my investing, and it's worth approximately 13,000 plus 700, so approximately 13,800 US dollars, which is approximately 18 to about 19,000 Australian dollars. Over the week, I have topped up on BlackRock. I've added a couple $100 here and also a couple $100 in T. Rowe Price. Now, as you may know, over the last couple of weeks, there has been a bigger pullback, especially for tech stocks. And for whatever reason that financial services was pulled along with it, I just saw this as a good opportunity to top up even more in T. Rowe Price and BlackRock. And next week, I'll be receiving my next paycheck. So it's very likely that I'll be topping up on my Home Depot, Johnson & Johnson, Microsoft, and definitely the real estate dividend growth stocks as well. So I'll be keeping you posted what I do next week. But I do want to make a note here that Dropbox, GoPro, and Nike are free stocks that's given to me when you try Stake for yourself. Now, I'm not sponsored by Stake. I just use Stake because it's incredibly easy to use and incredibly affordable. On that note, if you wouldn't mind a GoPro, Dropbox, or Nike when you try Stake for yourself, I'll leave a link in the description box below. In my next video, I will be covering Big Tin Can. I am sorry you had to wait so long because it does take me a while to create these videos. But if you did learn something new, just make sure you gently smash that like button right there and make sure you subscribe to my channel, click onto the bell so that when my future videos are ready, you be the first one to know. And of course, Otto will always do the honors and see you very, very soon.